Hello, and welcome to Own Your Retirement. My name is Albert Lalonde from Kaizen Financial Group. If you'd like more information about what you hear during our show today, give us a call at 586-752-7008 or visit us online at www.kaizenfinancialgroup.com. That's Kaizen, Kaizen. And while at my website, click on the podcast page to check out our past show and to subscribe to our program on Apple Podcasts, Spotify, or Amazon Music. All right. When the Federal Reserve recently announced the rate cut of 0.5% or 50 basis points back in September and another 0.25% here last week in November, it set off a flurry of chattering within the financial news sector. Now, is this good news or bad news? Well, what does it mean for retirees and what does it mean for home buyers? Well, all excellent questions. And during today's show, we're going to discuss what the rate means for the average American. But before we dive into that timely topic, let me introduce my co host, Tony Shore, who I'm sure is already eyeballing a vacation home thanks to that rate cut, right, Tony?
No vacation homes for me.
Oh, man.
In fact, Albert, my motto is I don't need to own a vacation home. I just need friends who own vacation homes.
There you go. Perfect.
I'm not going to name names, Albert Lalonde, but
Not yet. No vacation homes yet. Yes.
I'm waiting.
There you go.
I'll wait.
Let me know
Uh,
where you want it to be.
yeah, right. But seriously, yeah, not yet. And I'm not the type to have a vacation home. I prefer just Airbnb it or
Yeah.
uh, renting someplace or sharing and knowing people who have vacation homes and then saying, hey, I'll pay you to stay there for an off week sometime, get a good
Right.
deal. But it is something, I'm in Minnesota and there are a lot of snowbirds
Yes,
that
yes.
go to Florida or Arizona, right?
Yep, same thing here in Michigan.
Yep. Yep. In the Midwest here, we have a lot of snowbirds, don't we? So I think that's a big part of this whole thing.
Right.
But I'm looking forward to the show today. Now, Albert, I have been crazy busy, but I have to tell you, I got the Christmas lights put up and all my Christmas
Oh my
decorations on the outside
goodness.
of the house. My wife and daughter do the inside.
Wow.
They're going to do that this weekend, but I got all the lights up. I went clear around our backyard fence with lights this year.
Good for
Lights
you.
aren't cheap to I'm like, I
Mm.
measured and I'm like, "Wait, I need 350 feet of lights?" That's like I'm gonna need to call up Albert and ask for a loan, I
So
think,
well, well, you better listen to this article then.
yeah, exactly, and I know we gotta talk about that, but first, Albert, how have you been? Do you have your Christmas decorations up on your house yet?
Not even
Do
close.
you guys do that?
We do, but, I don't do lights, I just do wreaths and whatnot and
Oh,
ribbons,
sure.
but,
Yeah.
yeah, it's just we just finished, really just taking down everything, taking down the garden, everything, so, probably after Thanksgiving, I just can't do it before, for some reason,
Right.
it's just too early
Normally
for me.
I would agree, but Thanksgiving is late this year, so
Mhm.
it's kinda late this year, so I thought, well, and it's supposed to be bad weather up here and rainy, so and getting
Okay.
colder, so I'm like, "I'm gonna do it
Right.
now because I had some time, this
Right.
weekend, so why not?" But, I think this is gonna be a good topic, for months before the actual announcements, the one in September and then the one this month.
Mhm.
All the financial news sites and online sites and newspapers were talking about the likelihood of rate cuts and the
Yeah.
Fed lowering interest rates. But when it finally became official, it certainly has been a feeding frenzy of stories. The
Mhm.
markets each time took big jumps. So this is a good one. Where do you want to begin?
Well, let's start with the CNBC article. It's titled "The Federal Reserve Just Cut Interest Rates by a Half Point. Here's what that means for your wallet. Now, that's probably the longest headline for any article we've done and cited on our show here, Tony.
Right.
But let's go right into it. So we should be making an important distinction. The federal rate, which is determined by the U.S. Central Bank, is the interest rate at which banks may borrow or lend to each other overnight. But that's not the rate that everyday person will pay. However, the Fed's recent move will affect the borrowing and savings rates Americans see every day. So,
Hmm.
again, this fall's rate cut article notes came at just the right time for many people because, well, of a series of rate increases beginning in March of 2022. And the central bank's benchmark reached its highest point in 22 years. Now, with that, consumer borrowing costs went through the roof, putting many people under increased financial pressure, Tony.
Right, and my wife and I, we wanna downsize now that all 3 of our kids
Mm.
are out of the house.
Yes.
One is out of college and married, the other is, her last year or last months of college, and the other one has a couple years left, but is out of the house at college most of the time. So we're thinking we wanna downsize to a one-level home, no
Right.
stairs, something we can age in place in. And we've been looking at that for the last couple of years, but with interest rates so high, we've had to put it on hold. And, I think I can't count the number of stories I've seen and people I've talked to about first time home buyers who are essentially priced out of the market, like my son and his new wife, um, because of the high interest rates and high housing costs. I think a lot of people who are looking to move from their starter home to something bigger or downsize were stuck because their mortgage rates might be low, like ours. I'm paying 2.9% on my
Yeah.
mortgage,
Yes.
so makes it kind of hard to move and give that up for a 7% mortgage or six, right?
Yeah. Even at a 4
Yeah,
with that position. So that's
right.
tough. And I definitely remember all those stories, Tony, and a fair number of my clients were in the same position as many of the people though that was quoted in those stories. So rates, well, they're going to go down, and in many ways a net positive, I would say, for average American. Now, however, one rate cut, even a sizable one, isn't going to solve everything all at once, and the one we just got last week again isn't going to make that big of a movement yet. Now, ultimately, this fall's rate cut isn't likely to produce significant relief for overall household budgets. What will help many people, though, is if this current rate cut leads to a series of additional rate cuts in the coming months. Now, the article also notes that generally interest rate cuts lead to winners and losers. Typically, lower rates are better for borrowers and are less advantageous for lenders and savers, for like baby boomers. And then we're going to get into what the rate cut means for specific categories in just a moment. But my first recommendation is that if you're curious about what the rate means for your current financial strategy, I'd urge you to reach out to your financial service professional to schedule a check in.
Right, and work with somebody like yourself, right, Albert, somebody who is gonna look at the big picture, take all that into account, and I know that's what you do for your clients and the people who,
Yes.
you talk with, and I think whenever a story like a significant rate cut dominates the news, it becomes easy to get caught up in things and maybe make emotional decisions. You don't wanna do that with your finances. Chatting with a financial services professional is the first step.
Definitely, definitely is. Now, let's look at those categories I mentioned a moment ago. The first of which is credit cards. Because most credit cards have a variable rate, there's a straight line from the interest rate to your favorite credit card. Now, because of the central bank's rate increases that began in March of 2022, the average credit card rate jumped from about 16.3% to the more than 20% that many people are seeing right now, a rate that's close to an all-time high. Now, in the months ahead, annual percentage rates will likely begin coming down. However, it will mean they're simply dropping slightly from the recent very high levels. And the article predicts that APRs will likely hover around 19% during at least the next several months. Now, in a nice analogy, the article suggests that interest rates took the elevator up, but they'll be taking the stairs back down. So this means that it's important to continue prioritizing paying down high cost credit card debt as quickly as possible because the rate isn't expected to drop quickly enough to provide you with much relief. And relatedly, you may want to discuss taking out a new car that offers a 0% balance transfer with your financial services professional.
Yeah, well, again, we come back to that same point, but it is so critical to not make any of these moves without working with somebody like yourself. And
Yes.
as you've said on previous shows, a lot of people rely on credit cards to purchase gas, groceries, other necessities, and then they pay off that full balance each month.
Right.
But and that can be a wise strategy, especially if you have a card that offers good perks. But like you get cash back or frequent flyer miles, but you can only do that if you're disciplined and have the money to pay it off each and every month. Don't let it roll into the next month and pay all that interest, right?
Yeah, that's right, Tony. Credit cards can be an important tool, but the reality is that few things in our financial lives have interest rates as high as credit cards.
Right. Well, yeah, and credit cards now, I mean, I've heard over 30% on some credit cards is the
Hmm.
interest rate. So
Hmm.
you don't wanna mess with them if you can't pay them off each month, and don't have the cash, for what you're putting on them. Now, in fact, speaking of that, I know you have strategies to help people out, get a plan in place. How can they get a hold of you, Albert, our
Yeah,
listeners?
folks, you can visit my website at www.kaizenfinancialgroup.com. That's Kaizen, Kaizen, or call my office at 586-752-7008. Discuss how we can answer your questions about rate cuts, your retirement goals, or any other elements of your financial strategy. Remember, it's our goal to help you prepare for the retirement you've worked so hard for.
All right. Well, yeah, and let's keep the show going here. I mean, you've given us some great information about the mechanics of rate cuts and how what that cut means for things like credit cards. What's next?
Well, let's stick with that long title from CNBC's article. The Federal Reserve just cut interest rates by a half point. Here's what that means for your wallet. And next highlights mortgage rates. I'm sure everyone's really listening to this now. Something that's an area of great interest for most people, though 15 and 30-year mortgage rates are fixed and tied to treasury yields in the broader economy. Anyone who shopped for a new home in the last 2 years has seen a steep decline in purchasing power due at least in part to the Fed's policy choices. Now, fortunately, rates are already much lower than they were just a few months ago. Currently, the average rate for a 30-year fixed rate mortgage is about 6.3%, according to the article. Now, the article spoke to a lending tree economist who anticipates that mortgage rates will hover in the range of about 6 to 6.5% during the next few months, with a decent shot, I should say, that they'll fall slightly below 6%. However, this expert threw some cold water on the news by predicting that rates will never fall back to their pre pandemic numbers. And all in all, mortgage rates are still quite high when compared to where they were just a decade ago. And home prices also remain very high in many parts of the country. And that means many people will remain priced out, as you were saying, of the housing markets for the foreseeable future still.
Right. I hope they continue to go down. I mean, now we're hearing, rumblings from the Fed after this most recent rate cut of a quarter of a percent that maybe they'll just hold off and not
Mhm.
lower rates again in December. But I'm hoping they do, because I have family members and friends who are eager to buy their first home or are looking to upgrade or downsize. And right now, a lot of those people feel stuck.
Yeah, no, definitely. I mean, it's even with the rate cuts and everything that's happening, we still have, to look at the economic numbers. Still have to look at inflation, and unfortunately, this month the economic numbers were slightly hotter than was expected, and so the Feds are saying that they're in no rush to lower rates. They want to make sure they do this right. Okay. And
Right.
now let's talk about the picture for auto loans. It's also full of nuances. Though auto loans are fixed, higher sticker prices and higher borrowing costs have hit many auto buyers hard. And right now, the average rate on a 5-year auto loan is more than 7%. That's a significant jump from the 4% most people were seeing when the Feds first began increasing rates, according to the article. Now, there is some good news, though. Fed rates cuts will likely drop the rate below 7%, helping to take some of the bite out of auto shopping for many people. Competition between lenders and more buying incentives out in the marketplace should also help people as well. And then many Americans have reported holding off on new wheels until interest rates drop or when attractive incentives return. And while one rate cut or two won't send everyone back to the dealership, it should help to some degree and may become even more potent should additional rate cuts occur in 2025.
Yeah. In fact, I briefly toyed with the idea of trading in my car, but
Right?
when I looked at the interest rates, I thought, yeah, compared to what I was paying, 5 or so years ago, I just couldn't do it. But things are changing a bit. In fact, I've noticed specials for people with really good credit ratings.
Yes.
There's starting to be some competitive rates. You're starting to
Mhm.
see the 1.5%
Yep.
interest or 0% even in some
Mhm.
cases on car loans. You have to have just the right interest, and that's on new cars. But they're starting to come down. You're starting to see those
Yeah.
things again, which is probably a good sign.
Well, they are, and you have to understand a lot of these automakers, they're providing these type of incentives for some of
Yeah.
their niche cars too, trying to
Yes.
trying to go ahead and
Exactly.
sell those. All right.
Yeah.
Now, the rate drop will also influence student loans. Now, while federal student loans rates are fixed, people with those loans won't be immediately impacted by the most recent rate cuts. But the story is different if you have private student loans, which can have either a fixed rate or a variable rate that's tied to the treasury or other rates. Now, once the Fed starts cutting interest rates, those with variable interest loans should see their rates come down over a 1 or 3 month period, depending on the loan's benchmark language. And additionally, people with variable rate private loans may be able to refinance into a cheaper fixed rate loan. Now, be aware though that refinancing a federal loan into, let's say, a private student loan means you'll sacrifice safety nets that federal loans provide, like deferments, forbearances, income driven repayments, and loan forgiveness and discharge opportunities. And extending the term of the loan means you'll likely pay more interest on the balance in the long run.
Right. And that's what we don't want. We don't want to pay more interest. But again, work with somebody who has your best interests in mind, a financial services professional like yourself, Albert. And we often think of Albert, a financial professional, as somebody who can help us prepare for retirement or manage our
Mhm.
assets. And you do that, but you also may be able to help people find a student loan repayment strategy that's going to fit into your overall broader financial strategy, right?
Yes, for sure. I mean, that's our job is to help folks, find strategies for not only to create income and more assets, but also take care of debt. Now, the article also details what the recent cut may mean for savings rates. And while the central bank itself doesn't influence deposit rates, yields are often correlated to changes in the target federal funds rate. So, because of this decade's Fed rate hikes, top yielding online savings account rates have made big jumps and are currently paying more than 5%. And then the most many savers have earned in almost 2 decades, if you think about it, and a large bump from the 1%, let's say, most savers were seeing in 2022. Now, unfortunately, if you haven't already opened a high yield savings account or locked in a certificate of deposit, you've probably already missed out on peak rates. But at the same time, the article notes yields aren't going to crater immediately after the Fed cut rates. So again, though that 5% rate is likely done, in fact, it is about 4 now, at least for the time being, it may still be worthwhile to meet with your financial service professional to discuss the potential benefit of adding a high yield savings account to your strategy before rates fall even further.
Right. Yeah, and you wanna watch that, and, that's really good advice. We're talking about some of the fallout from this, recent Fed rate cut, the last 2 cuts, actually, and you've talked about how can affect credit cards, mortgage rates, auto loans, student loans, and savings accounts. What's next on the agenda?
Well, there are other categories that will be affected by the rate cut. And let's go now to an Investopedia article titled How Federal Reserve Interest Rates Cuts Affect Consumers. It has some excellent details that we want to touch on. First, if you have a CD, you don't need to do anything because your rate is locked in. A rate cut will, however, result in lower rates, which will be a factor if you want to purchase additional CDs. Now, there will also be an impact on deposits that have been placed in money market accounts. Banks use money market account deposits to invest in assets like CDs and treasury bills, which are generally considered safe, but a Fed rate cut will produce lower rates for money market accounts. And then, unlike a money market account, a money market fund is an investment account. And though both pay higher rates than a regular savings account, they may not have similar responses to the rate cuts. And then, lastly, a money market fund's response to rate cuts depends on whether it's taxable or tax free, such as one that has investments in municipal funds. Now, generally, taxable funds adjust in accordance with the Fed, so consumers can anticipate seeing these securities offer lower rates when there is a rate cut. And then often rates on municipal money market funds are already lower than their taxable counterparts due to their tax exempt classification. So they may not follow the Fed's lead at all.
Mm. Interesting. So
Mhm.
that's great. Now, how about investments? Obviously,
Ah.
interest rates affect investments. What does a rate cut mean for them?
Well, the interest rate has a direct effect on your investment portfolio, including 401k plans and brokerage accounts. Now, according to the Investopedia, lower rates are often a boon for stocks, except for perhaps financial sector stocks. They're also a negative for bond prices. Now, lower rates may also position investors with margin accounts to take advantage of leverage at lower rates, which increases their effective purchasing power. Now, higher rates may drag stocks lower while also increasing the value of bonds. Generally, longer term bonds are more sensitive to interest rate adjustments than near term bonds are.
Hmm.
And as I always note on our show, when investing comes up, if investing in the market is part of your financial and retirement strategies, only do so with the assistance of a financial services professional. A 30-minute radio show simply doesn't provide enough time to explain the ins and outs of investing. But investing in tandem with a financial service professional will provide you with all the time you need to make informed decisions.
Okay. So when we talk about interest rates or inflation, who benefits from higher interest rates and who benefits from inflation? There have to be some clear winners and
Yeah.
losers,
Yeah,
right?
great question. Well, when it comes to high interest rates, it's typically banks who enjoy the biggest rewards. Remember, banks make their money via the rates they charge on loans to to their customers. And so obviously the higher the interest rate, the more money the bank makes. Now, on the other hand, it's generally borrowers who get the biggest boost from inflation because the money they're paying back to their lender is worth less than it previously was. This is true so as long as the borrower's wages are also rising.
Yeah. Well, and this has been a really educational conversation so far, Albert. Let me see if I can boil it down, right? So
Okay.
The Federal Reserve uses its target rate as a financial policy tool, and the overall impact of a change to that rate comes down to whether you're a borrower or a saver, right? And it also is essential to read the terms of your various financing and savings agreements, your loans, so you're familiar with how interest rates will apply to your situation and determine how a Fed cut or increase can change your financial situation. Am I right there?
Tony, I couldn't have said it better myself. The Fed announcing a rate cut may also be an excellent time to schedule a check in with your financial service professional. When you found out about this most recent rate cut, many things probably started playing in your mind. Should I refinance? Does this mean I can finally buy that new car I have my eye on? Child number three is on the way and we need a bigger house. Is it time? And in the end, the current interest rate is just one factor in how you answer those questions. The biggest part of the answer will come from your current overall financial picture. And that's why it's important to make sure you know your numbers and work with your financial service professional.
Right. And again, it comes back to that, right? Working with somebody like yourself, Albert. And I know you love to hear from our listeners out there,
Mhm.
and they can set up a no charge, no obligation consultation. And again, your financial strategy should be designed in a way to handle any rate increases and rate cuts, correct?
You got it. In fact, diversification, clearly defined needs and goals, an ample amount of savings, a solid emergency fund. These are all things that can help you greet the news of a rate cut or a rate hike as more of an interesting news story than as a matter of financial life and death.
Hmm. Well, another great episode, Albert. Do you
Yes.
have anything else for us before we say goodbye today?
Folks, you can visit my website at www.kaizenfinancialgroup.com. Again, Kaizen, Kaizen, or call my office at 586-752-7008. Discuss how we can answer your questions about rate cuts, your retirement goals, and any other elements of your financial strategy. Remember, it's our goal to help you prepare for retirement you've worked so hard for so you can own your retirement.
Right. Great show today, Albert. That does it for today's episode of Own Your Retirement with our host, Albert Lalonde.
Take care, everyone. Very good.